this. It's my fourth time actually doing this. Almost 2 years at BNI. Beginning of next year. It'll be exactly 2 years. For those of you who don't know me, Albi Kajlica with Custom Rate Mortgage. I hold the residential mortgage C3 chapter, as I say every week on the 32nd commercial. A little bit about me. I was born in Albania, moved here when I was 18 years old. I have lived in St. Pete, Florida for the last almost 26 years now. And probably the greatest city in the US, one of the top 10, I would say. A little bit about my background. Got married about 8 years ago. We have 2 beautiful daughters. One is almost 6 and the other is 3.5 years old. We, as far as my work background, I have been in the restaurant business or hospitality for almost 20 years, then started the mortgage business about 5 years ago. My partner and I, we worked together for, at a different large company for about 1.5 years, 2 years, and then decided to open our own, and have now grown it since April of 2023 is when we started. Have grown up to 25 loan officers and about 4 processors. As far as what we do or the products that we offer, some of them, of course, we offer pretty much every mortgage product out there. We do not like to do the HELOCs, but some of the main products are like the FHA mortgages, VA, where you can go 0 money down. Conventional, of course, that's the most popular mortgage. And then we also offer the non-traditional mortgages, right? So those are called non-QM or non-qualified mortgages, such as DSCR, debt service cover ratio. So basically, you're not showing any of your income, or you're qualifying on the income that is produced from the property. For example, you put 25% down, and the projected rental income for a property is, let's just say $2,000. As long as that mortgage payment is $2,000 or less, that's what qualifies. And of course, credit and assets. Another product that's non-QM are bank statement loans, and those are very popular for self-employed borrowers, right? So you're self-employed, make decent income, it's not shown as much as the bottom line. Of course, then we can use those bank statements, produce a calculation, and then be able to qualify you for purchasing, whether it's a primary, investment, second home, and so on. What makes us different? So we have partnered with about 25 top reputable lenders that pretty much offer all these products that we're talking about. And we consistently, check on the market to make sure that, we're very, very competitive. So we're very competitive with pricing. We're very fast when it comes to, procuring a mortgage or actually getting people to the closing table. And we also, we drive the point of taking care of the client first, right? Taking care of the customer, because for a lot of people, for most people, right, it's probably the biggest purchase in their life. So, you want to make sure that you walk them through all the steps. Additionally, a lot of people, it's also first-time home buyers, so they have no idea what they're doing, right? So you also want to take care of that. And then speed, of course, like I just talked about, competitiveness. Let's see what else. Call to action. So, some of the best referrals for us, of course, are realtors, because realtors are the ones that initially get introduced to a buyer that's purchasing a home, and then they introduce them to us. And then, of course, as I mentioned earlier on the 36-second commercial, team leads are also, realtor team leads are also a great referral source, because they have 4 or 5 realtors working under them, and that would also be a good resource. Other than that, it would also be, of course, all folks that are looking to purchase or refinance a home. And that concludes my presentation. I'm not sure where I am with time. Looks like I went through it very fast. But anybody have any questions?
Interest rates?
Interest rates are right now right at 6.25 for conventional. 5.75 are in the FHA and VA, and then of course the non-QM that we're talking about should be right around 7. It's always more expensive. It's a higher rate for investment properties. Yeah.
What's all this talk about a 50-year mortgage? Is that possible?
So yeah, it is. It depends on people. So it could be beneficial for people that play it in a smart way, right? But then it could be very damaging in the long term. So most mortgages, I would say 90% of mortgages, somehow get settled within the first 7 to 8 years. Either it gets refinanced, they sell a house, they move, or whichever the case may be. So, what they're proposing is like, well, if most people are doing this anyway, why don't we just give them the opportunity for them to just be able to get in, into a house, because, the monthly payment and the prices and the rates are so much higher now, so the affordability, it's tough. So that's why they're proposing the 50-year mortgages, if that's gonna happen in 7 years. But what's gonna happen is you're not gonna pay much of the interest, right? Oh, excuse me, principal, in those first 30 years, because, the bank is gonna get it.
Are property taxes gonna go away?
Wait, I mean, let's just say, he's shooting for the sky, but if it settles somewhere in the middle, I think it's gonna be a big win for us, for sure. And in terms of, affordability. Yeah, sure.
So the prime's right around 6 now. Is there a way to get lower by buying back points?
Of course. So, yeah, you can buy the rate down, but in this environment.
How low can you go?
To where, probably I'd say 4.75 to 5% for conventional. But it can cost a lot. It can be very costly to do a permanent rate buy down. And what you also have to consider when you buy the rate down is that, especially if the rates are trending down, right? And if, let's just say they go down by 1 percentage point by next year, and it looks like, that's gonna be the case, of course, nobody has a crystal ball, but, it looks like that's gonna be the case, depending on the political environment, who's gonna put us in Fed chair, and then it looks like the rates will go down, right? But what you did is you spent $10,000 on buying the rate by so much, and then next year the rates go down by a point, you could have just refinanced it, and then if you do decide to refinance it, after spending this 10 grand, that 10 grand is gone. So anytime that we do with the clients, when we do the permanent rate buy downs, we usually try to go to a break-even point in 2 to 3 years, meaning that if you spend $3,000 and it saves you $100 on the monthly payment, you don't want to go over 30 months, right? So just in case, something you decide to refinance the house later.
Give you a quick scenario real quick.
Sure.
So like if you have a house that's fully paid off and you're gonna take a certain amount of money to go purchase another house and have that as a rental, can you explain how that will work? What kind of loan that would be?
Yeah, of course, it depends, right? It would be an investment property, loan, and then it depends on whether you use, the traditional income or you use the income from the property, right? So it could be conventional or it could be DSCR. But yes, and the same thing, for example, you live in your house and you wanna buy the next house, and, for some reason, the income doesn't support both, then you can use the income from the departing residence, what it's called, you get a 1007, or the projected rental income from the departing residence to be able to support or at least offset the liability